Thanks for choosing AgriSompo North America and our distinguished crop insurance partners. We appreciate your business. Today, we will take a look at additional coverage levels, trying to figure out where to get the biggest bang for your buck. We'll look at the supplemental coverage option, SCO, and the enhanced coverage option, also known as ECO. Before I get started, I wanted to remind you that the following information is provided for educational purposes only. While we believe this information is correct and reliable, please work with your agent, refer to the RMA website, specific provisions, and handbooks for more details. Let's begin with the supplemental coverage option, or SCO. The supplemental coverage option, or SCO, is a crop insurance option that provides additional coverage for a portion of your underlying crop insurance policy deductible. You must buy it as an endorsement to the yield protection, revenue protection, or revenue protection with the harvest price exclusion, or the actual production history policy for crops that do not have revenue protection available. The potential indemnity payments for the 2021 crop year policy would not be paid until 2022. Here's a couple of visuals to indicate how SCO, or the supplemental coverage option, fits when it comes to coverage range. As you can see in the example on the left, SCO sits on top of the base policy. Let's assume that you had a 75% coverage level individual policy as a base. You can add the SCO area-based coverage from 75% up to 86% for an 11% coverage band. That would leave the deductible from 86% up to 100. On the right-hand side, you will see we have a higher level base policy up to 85%. So the SCO provides 1% of coverage up to that deductible. As you can imagine, SCO premiums will be more expensive for the example on the left than they are on the right due to the band of coverage that was elected. Here's a premium example. This is an example that I ran for someone in the state of Minnesota. Premiums, of course, will vary based on crop, county, and APH information, but we wanted to give you some information for discussion purposes. Let's take a look at the base revenue policy near the top of your screen. For discussion purposes, let's start with a base revenue policy. Remember, a revenue policy gives you a guaranteed price and a guaranteed yield, or a combination of the two. As you can see, the base premium in this example is about $6 an acre up to $22 an acre, depending upon which coverage level you select. Adding the SCO coverage would cost an additional $2 to $10 per acre, roughly, depending upon which coverage level you selected for your base policy. In some cases, it may be a better value for the producer to bump up a coverage level instead of spending those extra dollars for SCO. As the numbers indicate here, buying a 75% revenue policy with SCO is a little bit more expensive than just buying that 80% base policy. So be sure to look at all the numbers and not get distracted by all the excitement of the program. The numbers will tell the true story for your specific situation. Let's look at the potential indemnity. Here's an example for corn. This follows the premium example that I had in the previous slide. In this scenario, we see the producer selected a 75% revenue policy, which cost him roughly $6 per acre for that supplemental coverage option. If his expected yield is 200 bushels and the county expected yield is 185 bushels, let's say that the final county area yield comes in at 175. So it's 10 bushel below the county average and 25 bushel below the producer's average. You can see that the indemnity near the bottom of the screen for SCO is roughly $18. If we subtract the $6 premium from that $17 cost, you're looking at about an $11 gain. So to pay $6 to potentially get $11. But depending upon where the prices and the county yields come in, the SCO may not have a claim. So it really depends. Again, a good opportunity to run the numbers and see, is the value there? So in summary, the supplemental coverage option does become a possibility, especially for producers who elect the price loss coverage or PLC at FSA. Electing the agricultural risk coverage or ARC at FSA and buying SCO will result in no SCO coverage and a 60% premium penalty. In some cases, buying up a higher coverage level on that base policy may be a better value than adding the supplemental coverage option, or lowering your base policy and adding that SCO. Let the math guide the way. Certainly, this endorsement works for some producers, but it's not a one-size-fits-all. Let's move on and take a look at the enhanced coverage option, or the ECO. ECO is new for the 2021 crop year. The enhanced coverage level, or ECO, is a new crop insurance option that provides additional area-based coverage for a portion of your underlying crop insurance policy deductible. It must be purchased as an endorsement to the yield policy, revenue protection with the harvest price exclusion, an actual production history plan, or a yield-based dollar amount plan of insurance. ECO is available on 31 different crops. It does provide a band of coverage from 86% up to 90 or 95% of the expected crop value. As I mentioned, ECO is based on your underlying policy plan of insurance, just like SCO. And the potential indemnity payments work the same as the SCO. The 2021 crop year policy payments or indemnities will not be made until 2022. As I mentioned, the enhanced coverage option offers two coverage ranges. Coverage ranges from 86% up to either 90 or 95%. You can choose a 4% band or a 9% band. It begins where the SCO ends. Here we have an example to show where ECO falls. If you start at the bottom, you will see the base coverage. So on the left-hand side, we have a 75% individual coverage level policy. Right above that is the SCO or ARC at FSA, and that would take coverage from 75% up to 86%. ECO will sit on top of that from 86% up to either 90 or 95%, and then we have the deductible on top. On the right-hand side, we have a similar example, just starting with an 85% coverage level at the bottom, 1% of SCO, 4% of ECO at a 90% level, and then a 10% deductible at the top. It is possible to have a gap and not elect SCO or participate in the ARC program at FSA. We have an illustration here to show the base policy at the bottom, the gap, and then coverage for the ECO and the deductible at the top. Either one of these scenarios is a possibility. Here we have the causes of loss for ECO. Widespread area loss of yield or revenue in production due to natural causes are all a cause of loss. Individual farm yields are not considered. Individual farms may experience a loss but not be paid ECO. No indemnity will be due on acreage that we have determined has been damaged solely by causes not insured by the underlying policy. Looking at the indemnities for ECO, those indemnities, like SCO, are determined by county average revenue or yield, depending upon the base policy that one has in place. Those indemnities are not affected by whether the underlying policy has an indemnity or not. It is possible to receive an individual loss, but not an ECO loss, or vice versa. Here we have a premium example for ECO. Again, this is just an example, a rough example for illustration purposes. You can see the different coverages and endorsements on the left-hand side and whether it's individual or area coverage. In this example, we included a gap. You can see the total liability as well as the premium and the guarantee on the base policy. So in this example, the ECO premium was roughly $25 an acre. Of course, it depends on your crop and your county, where you're located, those sorts of things, what the prices look like in APH. Looking at the potential ECO indemnity, we wanted to show you that if someone paid that $25 for ECO and they had an APH of 200 bushels, the expected county yield was 185, the final county yield came in at 175, and we're using a projected price of 441 and a harvest price of 425. SCO potentially could pay $51. However, if you remove the premium from that total, the net number would be about $26. So it might be worth it to buy the ECO. Here's another example though, similar situation, that county yield though is going up to 185 instead of the 175 we had in the prior example. In this example, the ECO indemnity turned out to be $5. So the net return minus the premium is negative $20, or basically you're paying $20. Again, all actual results will vary. Talk with your agent for specifics in your area. So here's a premium example to show where that ECO premium might be compared to your base policy. As you can see near the bottom of the screen, the ECO premium is the same, regardless of your base policy. You just have a different gap amount in between, or you have different SCO coverage. Again, looking at that 75% revenue policy with the enhanced coverage option, the total premium for the base policy with the enhanced coverage option is roughly $30. In this example, the producer could get an 85% individual policy for about $23 an acre. So it might be a good opportunity for that producer just to bump up coverage. Again, talk to your agent, let them run some numbers for you. Every situation is a little different. So here we have a few reminders in summary about ECO. It does give you an opportunity to purchase county or area-based coverage in bands up to 90 or 95%. ECO is not available with cat coverage, the RPI, margin protection, the hurricane index protection, wind index, or any other area county type based plans. ECO can be purchased along with SCO, the supplemental coverage option, and the FSA, ARC, and PLC elections have no impact on ECO. ECO is highly subsidized and is a great alternative to some private products. Losses are determined by county average revenue or yield, not your individual farm. So it is possible to receive an individual loss, but not an ECO loss, or vice versa. As always, let the math guide the way. Thanks for choosing AgriSompo North America and our distinguished crop insurance partners. To learn more about SCO, ECO, and any other crop insurance products, please visit with your local AgriSompo North America partners. We appreciate your business and wish you nothing but success in the days and years ahead. Be safe, friends.